Are you thinking about buying or selling a house, or just want to know what might be going on with one of your biggest investments? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show. We're sponsored by Bricks Real Estate, Network Title, Eric Bloomstrand and Chad Preby with Bell Bank Mortgage, Structure Tech Home Inspections, James Tolfson with Country Financial, along with Cregan's Construction and Grey Duck Staging and Design. Check us out online anytime at TwinCitiesRealEstateShow.com. There you can find all of our past shows, our weekly market updates, along with the latest and greatest home searching, researching tools, and our free publications, the Smart Home Buyer, the Smart Seller Guides, both great little books to check out again at TwinCitiesRealEstateShow.com. If you have questions for us, you can give us a call, 651-303-0019. Again, 651-303-0019. Happy to help with any of your real estate questions or needs. Today, we're going to be talking about a topic I've been hearing a lot more about, probably first mentions of it, well, back when the stimulus packages started coming out, right? Concerns about what might happen with inflation. So yes. I wanted to address how inflation will affect the real estate market. Because this is something, looking at past recessions, I used to have a chart hanging up in my office that showed, the ups and downs of the economy and then how that translates to the real estate market. So that way I could remind myself to when these questions come up, how to address them with people. Mm-hmm. Yep. And, it really came in what I wanted to do the show topic on kind of yesterday. I decided that, I had a couple clients, and then in our Monday meeting with the company, so a whole bunch of agents and a few brokers chatting about where, inflation might drive home, what's going to happen with home values, right? Yeah. And, it seems to be tied in, and we'll talk about this more in the second half of the show, but, about, is there going to be some sort of burst in the real estate market?
Don't think so.
Hey, don't give away the second half. By the way, I'd like to welcome my guests here, Joe Schwartzbauer, Grey Duck Team, Bricks Real Estate, and Jilly Jenkins, also with Bricks Real Estate. Thanks for coming in, guys.
Thank you.
Yeah, so, it's an interesting topic, and
something so many people are talking about right now.
Yeah.
And that people don't understand. Like, I feel like inflation, a lot of people got to grasp it a little bit.
Well, yes.
And the effects in housing.
Yeah. I think, just the general, when I was listening to my clients ask the questions, that got me doing even more research into it. And I think it's going to be hopefully beneficial to anybody watching or listening to the show to see how this may affect, if they own a home or thinking about buying a home, how it may affect their home value. So, Joe, I don't know, or Jilly, have you had this question come up a lot as well with your clients?
Definitely.
I was talking earlier, I call her my lifetime client. She's been with me since I've been licensed for years and years and years, and has never bought, has always looked, but never bought. And, she's always said, well, maybe I'll wait till it bottoms out again. Mm-hmm. Maybe I'll wait till it bottoms out again.
I'm gonna thing we're hearing right now.
And 8 years later,
hasn't bottomed out.
You spent $20,000 a year on rent.
Yep.
And now the inflation rate, you said, Kurt, was like 2.5%.
Well, that's the normal.
A year.
But
it's more now lately, right?
Things are picking up. Yep.
So she could have bought when I very first met her years ago. Now, it's like a $100,000 difference for what her price range she was looking at.
Well, and that's so we talk about 2.5% average, I think is what it is for inflation, but we have appreciation, right? Mm-hmm. And that's averaging, which I need to go back. The last few years, it's been averaging between 8 and 9% per year. 8 and 9%.
North St. Paul, I have a client right now, 25%.
Yeah.
25% in North St. Paul.
There's areas that have absolutely exploded this year.
Mm-hmm. Yeah. We're seeing, I think at the peak, it was 14% across the entire Twin Cities average.
It's wild.
Right? 14%. So, $28,000 for a $200,000 home. and I hear people talk about, saving, and I talk about, well, the cost of saving. How much money is it going to cost you to save? So, I'm going to save $10,000 more for a down payment.
Yeah. Well, and the home prices go up. You haven't really saved anything.
Right. Yeah. You haven't saved anything.
The rent's not going to your equity, to your mortgage.
Yeah.
You're paying someone else's mortgage, unfortunately.
So, yeah, I mean, we know housing prices going up. One of the things I want to answer with this show is, people who are looking for a bottom, there is a bottom. We're going to talk about that, right? And yeah,
I feel like it's more of a plateau.
So, we're going to get in that. Joe, first off, let's cover it with definition of inflation.
Well, I mean, inflation is essentially cost of goods going up and the value of the dollar staying the same or essentially going down. I mean, the price of coffee in 1970 compared to what it is now, I mean, 25 cents to probably about $2 a cup.
$5.
Prices go.
Well, I think at Wall Drug you can still get the 5-cent cup of coffee. I don't.
That's at Wall Drug. Not too many of us are heading over there, so yeah.
Well, yeah. I mean, I use the 5-cent.
Where the heck is Wall Drug? Yeah.
Yeah.
Wall Drug has came up so many times the past week. For me, it's weird.
Yeah, the 5-cent Coca-Cola, right?
Yeah.
Right.
Yes.
I mean, you used to buy a Coke for. I remember as a kid, 25 cents, 50 cents, somewhere in there. I know I might be dating myself.
Cost of goods are just they're going up.
Well, and so inflation is meant. I mean, it's built into the system.
Right.
Inflation is built into the system. We know these things have changed over time. Mm-hmm. So, what I would like to do is, Carly, can I have you pull up, and we have Carly here. Can I have you pull up the inflation chart real quick? And so we can see, and what we're looking
to look at.
Yeah, what we're looking at here is the percentage of inflation since around 1965 all the way to today. Now, we don't have the most recent numbers as in the last couple of months in here, but we do know it is moving.
Go like this.
Yes, we know it is moving back up. The areas in gray are times of recession. Okay, so we look at the 1980 and a 12.5% appreciation rate, and we can see these recessions. They happen. They just happen, right? I actually went up.
Cycle.
Yeah, you can probably take that chart down now. There's an average to it. Sometimes you have more that come up, 1970, then in 1975, and then 1980, right? But I remember looking at this going back to, I think it was like 1940 something. Mm-hmm. And like one of the biggest gaps was from the mid 50s up until that 1970s point, mm-hmm. right? That was the longest period of time. So it was like bound to happen. I know you were mentioning that before the show, the economic growth that happened during that period of time. So we know we're going to have these recessions. We know we're going to have some inflation that's in there when we have as the economy gets stronger. But getting to the point of how does this affect housing, Carly, can you pull up the U.S. housing price chart there? So when looking at this, and we look at those same periods of time, and again,
doesn't seem to impact it much.
Not much. And somebody might go, well, look at the 1990 right there. It drops. Yeah. Okay, so that percentage or that amount of dollars, that it dropped was a few $1,000s, right? A few $1,000s in the median sale price during that recession. But if we look at 1975, housing prices moved up. We look at the mid 80s, it went up, went down a hair, and then ended back. Yeah. It went back up, right? So that, as it goes up and down, when we're looking at this, it's kind of a coin toss. Just as almost any time on this chart, it slowly moves up, but ultimately, we know that you're going to have your little ups and downs in there.
Well, basically, for real estate, the market is always a roller coaster, but it's only going up. When you look at this map, that's the truth. It's only going up.
You look at any 20-year trend. I mean, it is. It's gonna be increasing.
And we've said it several times. Real estate's a long game.
Yep.
It's a long game.
Yes.
If you own it long enough, you will. We were
Right.
saying you're going to be able to build generational wealth.
Yes.
Yep.
That's a big deal.
We're going to chat definitely more about that as we get into the second segment, as to, you know, how do you deal with this once you understand where the housing market is at. So obviously you have this big drop off of home prices. Well, what about 2008, 2009? Okay, that was caused by housing.
Yes.
Right? Carly, can I have you pull up the inventory chart that I have there? Right? And so
it was bad mortgages, It was a
well,
lot of-
well, right.
predatory
So we had a ton of homes on the market, over 33,000 houses in the Twin Cities area on the market at that point in time.
Boy, can we get even a third of
I
those
know.
back?
Right. So we know that ultimately, that it was housing basically that caused its own demise in a sense, right? It was this huge amount of inventory and then kind of a looming set of foreclosures that was going to come because of the like you say, the lending that was going on at that time, not really having the rules and regulations in place.
Like we have now.
Hugely.
Big
I
difference.
cannot press that enough, how much regulations there are for lending now compared to that.
Right,
time
and that
frame.
helps us so we know that we're not going to have this happen again, right? Hopefully.
I'm guessing it's the same for both of you. Everyone you work with, that's their comparison of the 2008 fallout.
Correct.
This is what I'll wait for to
Right.
buy.
Yep.
It's not going to happen again.
Right. Well, and it goes back. I mean, just if you look at that chart, 33,000 listings, right? And anybody and everybody could buy a house whether they had the job or the
They could buy
income to
2
do
or
it.
3
Anybody
houses.
could get it. So when we come back after the break, we're going to dive into, well, are we just in a bubble then? What's going to happen, or how are we going to see a difference in our marketplace? When are things going to change? And we'll get back to that in just a second.
Right?
Hi, I'm Ruben with Structure Tech Home Inspections. Everyone knows you should have a home inspection before you buy a home, but we've heard of home buyers being encouraged to skip the home inspection in this crazy market to make their purchase offer more attractive. Now they're facing tens of thousands of dollars in unexpected repairs. I'm telling you now, don't skip the home inspection. Here at Structure Tech, we can get your home inspected quickly, and we offer a full line of services. Visit us online at structuretech.com to learn more.
Clickbait. There is no such thing as today's rate. Mortgages and mortgage rates are individual to you. Chad Preby and Eric Bloomstrand with Bell Bank Mortgage are here to show you the formula to get your best rate. Once you know this formula, you can mortgage shop with confidence. Find us online at chadpreby.com. That is chadpreby.com, NMLS 1462493, Equal Housing Lender, member FDIC.
Hi, I'm Kirk Duckwall with Bricks Real Estate and the Twin Cities Real Estate Show. Buying or selling a home is one of the biggest financial transactions people make. Before you make your next move, download our free Smart Home Buyer or Smart Seller guides to give you the edge in our real estate market. From deal hunting to knowing the right repairs for maximizing value, these free guides have it all. Check them out and more at brickstwincities.com under publications.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
Welcome back to the Twin Cities Real Estate Show. Today, talking about how inflation affects the real estate market, and going back to those charts that we just looked at in the previous segment. You really see it's a coin toss if it's going to affect it outside of the one time, right? And Carly, can you throw up that chart of total number of homes for sale again? So that one time, right? 36,000 listings on
Bring some of them back.
Or 33,000 12-month
Please.
rolling. Yeah, and now we're down to 7,000 listings on the market, right? So
Supply and demand right now.
right.
Now.
And that's, I remember the first time I I mean, it's simple, right? Supply and demand, right? But I remember when I had two charts printed off. I had the monthly rolling inventory, and I had the monthly rolling home prices, right?
Yep.
And it's the ups and downs and the ups and downs, and I had the two pieces of paper, and I was getting ready to do an open house, and I had them overlapping each other, and I looked and I held it up to the light, and I'm like, well, no, it's as the inventory went down, the prices moved up, supply and demand, right?
Yeah.
And so we're in this spot here that. And we're going to talk about this in a second with what might be able to fix the market that we're in with prices.
Yeah.
But, going back to the, how often a recession happens, right? It's basically the average is every
10 years. Right?
Yeah, 9 years, right? And so we're, the last one kind of ended. It was bottom was 2012, right?
2012.
So man, it seems like we're due.
And then you said, when do the prices kind of meet back up? After
Well,
2012?
in 2017, right?
Yep.
That things came back
what they were before.
as the inventory started to come down. So is there going to be another something that may happen that drops it? Well, what if it already happened?
Yeah.
Right? We had an interest rate spike.
Yes, we did.
Right?
Yep.
Last year
And a huge loss of
in
inventory.
April, right? We had basically buyers and sellers completely removing themselves from the market.
Yeah.
Right? It's just we recovered really fast.
Very quickly.
Yeah.
Quicker than
Right.
a normal recession.
We had the stock market bottom go what was it, 40% drop or something?
Yeah, roughly.
Right?
It was terrible.
Yeah. Right, the stock market fell a lot. Sounds a lot like a recession.
Totally
Yeah,
does.
it just, we
Right.
recovered so quickly.
Right. And so maybe we're just back and going back to that chart. The one time where housing prices dramatically went down was caused by housing.
Yeah.
Right.
Yes.
So
Correct.
if
Bad
Predatory
mortgages,
lending.
Yeah, predatory.
Yep.
Definitely.
right. So is there something in the future that could cause that? Well, let's kind of run through those scenarios. Okay, the foreclosures we hear that are coming.
I'm so sick of hearing about foreclosures.
Yeah, I mean, that's just, it's
They're not coming.
No, it's
No.
not going to happen.
Right.
It's just not.
And the reason,
And they're not going to affect the
And
market
they're
either.
priced at fair market value or higher,
Right.
from my experience.
Yes,
they're
most
priced
definitely.
higher than they should be.
Banks got smart, you know. They're no longer
they don't
just
have-
put it out there, let's get some money for it.
They don't
you know?
have so much to manage to try that they're losing money on sitting on their desk to get rid
Correct.
of,
Yes.
honestly.
Yep.
They don't. And I'd said before, when I very first started in real estate, I was at the end of that fringe where there was still foreclosures that people had forgotten about. Like banks forgot they own them.
Right.
You
It's
could
a
get them
wild
for
thought.
nothing, dirt cheap, nothing. That I haven't seen that in at least 6 years. It
no.
doesn't exist. It's
Right.
not a thing. The predatory lending is regulated now.
It is. Yeah. There's a lot more regulation in place.
Yeah. And
yeah, you actually have to show that you make money
Totally.
to get a house,
Yeah.
right? So, people that haven't been, the forbearance that's been going on, right? There's been this thought, oh, well, all the forbearance, once that ends, there's going to be a ton of foreclosures.
Right.
No, because their house values went up so much. They're just going to sell. Why would they foreclose when they can sell and get out of it and take money? Even if they can't make a payment. And what's so interesting right now is places are short-staffed,
Right. Well,
like-
and the big scare with the forbearance is that people are going to owe all of that
balloon
back.
payment
Yeah,
at
the
the
balloon
end.
payment right at the end of when they come off of
Right.
forbearance. Well, they changed that. Now they
Right.
can just
Fix
add it
that.
on to the end of their mortgage, which really completely changes things for a ton of people.
And
Right.
people were rightfully scared for a
Without
minute
a doubt,
there
yeah,
with the
that-
idea of a balloon payment.
Definitely,
But
that
that
could
didn't
could have
happen.
affected the market much differently.
So then let's go to the next thing that could add a bunch of inventory.
Yep.
That's not really right,
Right.
Which is the end of the eviction moratorium, right?
Yep.
That there's going to be a whole bunch of people that own these properties that want to then get rid of them, right?
Which I just don't see happening. Yes, there are investors out there that own 1 or 2 properties and have been affected by it, and maybe will say, I just want to get out of it.
Right.
But with housing prices so high for what they are,
somebody's going to pick it up.
Exactly.
And for ones that maybe are in deteriorated condition that don't necessarily be able to get a loan for,
the seasoned investors are going to jump all over those.
Well, and that's the thing is, we've had investors removed from this market for quite a while. Yeah. So, you know, if those places come in place, they're just going to get picked up right away. So we know rentals aren't going to solve this.
Right.
Okay, what about the boomers, right?
Yeah.
They're going to sell their homes. There's going to be a bunch of these old homes that are coming.
People are living in their homes for much longer now. So many people that are older are, you know, fixing their home, changing their home so they can stay in it for longer. Exactly. It's just
and there's more access
people are living
to
longer.
in-home healthcare stuff.
Yes.
That wasn't a thing maybe 20 years ago as much as it is now.
Yeah, the idea of home really changed over the past year and a half with everything that went on, and people are really they're wanting to stay there for longer.
Yeah.
Yeah.
So we're not going to see a ton coming there. Well, can we build ourselves out of it? No. Well, I'll tell you right now, at least in the immediate picture, is lumber prices are skyrocketed.
They're starting to come down.
Right. We do know that
futures are coming down.
The futures are coming down, and hopefully that brings some ease. I mean, I'm hoping for it because I have a house that I'm waiting for the prices to come down so I can put on that deck.
Yeah, right.
I want to put a fence up.
Right.
We can't build out of it. I mean, we lost so much. And what was the stat that blew my mind? You said that we lost so much, like 10 years of building.
Decade over decade since the 1940s, every decade we have built traditionally in the United States about 25 million homes per decade. From 2010 to 2019, we built 5.8.
It's insane.
So we are so far behind on new construction builds that even if every builder out there started building homes at 3 times the rate, it's going to take 5, 8, 9 years for this to get back to a point of where we should be.
Where there's enough housing for buyers. Yeah.
So there is one thing that could change this, which is rates.
Yes.
Right? Interest rates being down. And I used to talk about rates in the home buyer classes that I taught. And I said, you don't want to worry about the rate as much because, you know, these quarter point fluctuations, that's not that big a deal.
Right.
But when rates drop by a whole percent, right? When they were at a 3.25 or 3.5 going down to 2.25 or 2.5,
the buying
that's a
power
30%, almost 30% drop in the interest that somebody's going to pay.
Yep.
Right? Yeah. It makes a home a lot more affordable. I remember hearing something, and this was a while back, but it was like, you know, for somebody who bought the median priced home in 2018 could afford, so that was like 270 some thousand,
260,
that they could afford a 325 house today.
Yeah.
Right? So because of that rate.
Median sale price in the Twin Cities is what,
fluctuating
342, 500 right now?
Yeah, something like that.
Is it up to that? I was going to say it usually is like around
single family homes are at
325.
365 right now.
Oh, wow.
Yeah.
I know, it's crazy.
And that went up in that much in a month.
We started this year median sale price of single family previously built homes at 315, and we're now up to 365,000.
Wow.
Yeah.
So interest rates, right? And the interest rate forecasts have us, you know, staying relatively stable.
The Fed said they want to keep rates low.
Yeah. You know, by the way, I mean, if this number stuff is something that interests you, we put out these weekly videos showing exactly where the market is. You go to TwinCitiesRealEstateShow.com and you'll see some of those charts like we had up, really tracking that. So, you know, it doesn't seem like there's a bubble that's going to burst. However, every year we actually have more fluctuation percentage-wise than any of those recessions outside of 2008.
We get a seasonal bubble.
We get seasonal bubbles.
Yeah. It's Minnesota. Right? It's cold here.
And a shock to a lot of sellers that biggest, you know, highest prices are in April. Right? It's not June and July.
It's just that's just when they're closing, but they're selling in April.
Right. April, May. Right? That's when they're going under contract.
Well, and this year I feel like our peak is actually going to come a little bit later because so many people were writing offers with extended closing periods to give the sellers time to find their new home.
Yeah.
Right.
So we were looking at a lot more contracts we were writing that were 60-day closings. It was just a very common thing, at least that what I was doing for a lot of my buyers.
Right.
you know,
Right. Yeah.
Or asking for when I had listings.
Yep. You kind of have to anticipate that right now.
Totally.
But we know it's slowing down out there,
Oh, yeah.
right?
The
we
numbers,
the numbers don't lie. I mean,
they
we're
just
down
don't.
by over 50%.
Yeah.
The peak was in that very early April time. It was the week before Easter, I think.
Yeah, number of showings per week per listing is down for 11 weeks in a row,
12 weeks in a row now.
It's wild.
Yeah. And so
good. It's very good.
that's just going to transition into sale prices coming back, but it's not going to be it's
more
not a
of a plateau.
$50,000 drop. I mean,
No,
depending
by
on
no
the
means.
price points you're at,
Right.
it could.
I feel like
but-
it's kind of just a plateau coming up.
well, so we drop off into about July, and then it plateaus, holds typically until September,
Yep.
and then starts to
So
slide
November,
again.
December, January, February, and we start to come back up.
So when is it that, as a buyer, when is it the best time to get out there? Well, some people say the winter market, but inventory is so low. You're really
Right.
picking from
You
and
can't
so,
be picky
Scraps.
in winter.
Right. And so when a good house comes on, because think about it, it's the leftovers. Most people don't want to sell.
Yeah.
So I really like the midsummer market because it's more inventory, but it's not that craziness that you have. So
I mean, there's always deals to be found. The
yeah,
Monday, Tuesday
well,
houses.
I love the Monday the Monday
a
houses,
bunch of showings
estate
tonight.
sales.
Tuesday.
All right, hopefully you found this information valuable.
Thanks, guys.
See everybody
Thank
next
you.
week.
My name is James Tobson with Country Financial. Anyone can sell you insurance. However, is it going to be the insurance you need? When life pops up with its surprises, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james.tobson@countryfinancial.com or give me a call at 651-365-3408.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
People always ask realtors, what is your commission? But what they should be asking is, what is your rate of return? Commissions only vary by a couple of % from agent to agent. However, the price per square foot you get just based on their experience and the quality of marketing they use can vary by 10% or more. At Bricks Real Estate, our agents use the right marketing and have the experience to get you top dollar for your house. See what we can do for you at brickstwincities.com.
Hi, I'm Becca, owner of Grey Duck Staging. With today's home buyers beginning their journey exclusively online, the look and feel of your home matters more than ever. Whether it's a simple in-home consultation, a refresh using your current furniture, or a whole home staging, our goal is always the same: showing your home in the best light and helping you achieve the highest sales price possible. To learn more, visit us at greyduckstaging.com or check us out on Instagram at greyduckstaging.